Hey everyone, in this video I'm going to evaluate the trade desk stock and answer if I think the stock is a buy, hold, or a sell. To answer that question, I'm going to look at its most recent quarterly results. I'm going to look at its longer term results in terms of revenue, profitability, and cash flow. I'm also going to consider the broader market it operates in, the advertising industry and the digital advertising industry. I'm going to look at the next 5 years, what Wall Street thinks about the trade desk and its earnings per share expectations in that time, weigh that all against its valuation to answer if it makes an excellent risk versus return for stock market investors such as yourselves. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in the most recent quarter, revenue grew by 28% year over year, and that was an outperformance of the overall advertising industry. Now, the company mentions that the total advertising addressable market is heading towards $1 trillion. The advertising industry is absolutely massive, and it's growing at roughly mid to high single digits per year every year. Now, an additional benefit to Trade Desk, it's a digital advertising company, and more advertising is moving towards digital channels. It's moving away from linear channels. So, for instance, advertisers are taking money away from their budgets in print newspapers, print magazines, billboards, etc., and they're moving it towards streaming TV, they're moving it towards social media and those digital areas because that's more effective. You can target your ads, you can see the information as to how many people clicked on your advertisement, how many people saw your advertisement, how many people clicked on your advertisement and bought something. So it's more measurable and you can see the results of your investment. Whereas think about if you invested in a billboard advertisement, how many people saw that advertisement? Who knows? How many people bought something after seeing that advertisement? Who knows? I mean, you can make some educated guesses, but that's what it'll be, just educated guess. You can't really get any precision on measuring the return on that investment. So marketers more and more are moving budgets towards digital channels, and one of those areas is connected TV. And the Trade Desk says that connected TV is their largest and fastest growing channel and will be for the foreseeable future. Now, this is a great industry to be in, especially right now. As you've noticed, more and more streaming providers are launching an ad-supported version. Netflix being the most popular recent streamer to make the shift and offer an ad-supported version. And Netflix said that in its latest quarter, in the markets that it makes the ad-supporting version available, 40% of new subscribers choose that version. So people are choosing that almost half of the time, the ad-supported option, because people get to pay a lower monthly price for the streaming subscription in exchange for watching advertisements, and people are willing to do that. And so that's creating more advertising inventory because those are more advertisements that will be shown to viewers that previously were watching Netflix without ads. And so that's more spending on digital advertising that will happen, overall total spending. Even if the price per advertisement may decrease in the industry, because remember, when you have increasing supply and demand is relatively the same, you're going to have lower prices. But the price per ad being decreased would not be that much of a bad news for the trade desk stock investors. The increase in supply would be offsetting the decrease in the price per ad if that were to happen. Remember, I said that marketers are looking for that digital advertising. So demand for that is increasing. There's a tailwind towards that area. So it's only early days in that, right? Netflix only recently launched that ad-supported version. It's not available in all of the markets it operates in, and consumers are only now beginning to consider that as a choice. Furthermore, I know this is kind of small here, but in the latest quarter, the company's revenue increased to 491 million, up from 382 million, and the net income increased by more than 3x to 31.6 million, up from 9.3 million in the same quarter the prior year. So the trade desk has hit that huge inflection point where now its increases in revenue lead to huge increases in profitability. Longer term, the trade desk's revenue has exploded along with the growth in the industry and the growth in digital, or the switch to digital. 2 billion in trailing 12-month revenue for the trade desk, up from less than 300 million in 2017. Unfortunately, I haven't seen growth in its profit margin along the lines of the growth in its revenue. As you'll notice here, you'll see the trade desk operating profit margin at 12.29% has actually moved lower since 2017, where it was closer to 30%. Now, it has been recovering. It's up to 12.29% after hitting a bottom of 0%. But that's not the case for the cash flow from operations, which is still on a downward trend at 29.02%. The absolute numbers are solid, 29 and 12%, but I'm not too happy with the trend line here for the trade desk's margins. Longer term, the analysts on Wall Street that are following the trade desk stock, they expect it to increase its earnings per share by 24% per year over the next 5 years, which is a solid increase in earnings per share per year over the next 5 years. It's more than twice the rate of the average company in the S&P 500. Still, when you compare it against the valuation, the trade desk is trading at a forward price to earnings of 52, so more than twice the earnings per share growth rate. And as I usually say, when I'm looking at expensive valuations like this, I'm looking for a lot of good factors from the business. Now, we did see many good factors, including the industry it operates in is moving in the trade desk's direction. It's in a good position to benefit from industry trends. It boosted its profitability in the latest quarter by more than 3x compared to the previous year. It has demonstrated solid revenue growth, growing faster than the industry overall. However, we did also notice a few downsides in that its operating profit margins and cash flow from operations in relation to sales are not improving all that much. And so when I'm looking to pay this high of a valuation, I want more of the factors to be working in the right side of the equation, not some of the factors being really good and some of the factors being mediocre. So I think the trade desk is an excellent business. I think it has a lot of catalysts for growth ahead, especially internationally, which I didn't discuss so much about here. The vast majority of its revenue is coming from North America, and overall advertising spending, more is happening internationally than in North America in aggregate. So there's an opportunity there as well for the trade desk. However, all that being said, if I was to rate the stock buy, hold, or a sell, I would say it's a hold, primarily because of the valuation. The valuation is more than pricing in all of those excellent prospects that I discussed, and I feel like it's a little richly valued given its metrics in terms of growth and profitability. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.